Hello, and welcome to myfinanceteacher.org. Let's talk about precious metals again. In looking at precious metals, let's have a look at the US dollar first. This is the DXY index in front of you, and what I see on the DXY index is an ongoing cycle that is at the moment 47 days old. Usually over the last few years, the short-term daily cycles on the US dollar lasted for an average of 59 days, say around a couple of months. Of course, sometimes there might be short cycles, sometimes there might be longer cycles, but based on the average duration, I think the US dollar still has possibly just a few days to slide downwards. And as I mentioned in some of my previous videos, there is a very strong support zone around 88 on the US dollar. Is it actually going to drop as low as 88 over the next several days, perhaps 1 week? That still remains to be seen. But I do expect at least a couple of pokes below the Bollinger Bands. We see that the US dollar is struggling to stay above the 50-day moving average. Over the last week or so, we've seen multiple knocks on that 50-day moving average. As you know, the more you knock on the support zone, the weaker it becomes. So, as I mentioned, a likely slide down in the US dollar index over the next few days. But after that few days, perhaps 1 or 2 weeks, we will come to the end of the ongoing short-term daily cycle in the US dollar, which means it will be time for dollar to bounce a little bit, at least for a short while. So what that means for gold is that over the next few days, I expect gold to continue upwards, perhaps retest that 50-day moving average, or perhaps retest this trend line simply based on a couple of most recent highs in late January and early February. So gold is probably coming up to somewhere around 1830, 1850 within the ongoing short-term daily cycle, which is right now 35 days old, before gold will come down into the end of that daily cycle. And usually the daily cycles on gold last anywhere from 1.5 months to around 2.5 months. So possibly a very interesting bottom, a very interesting buying opportunity in gold sometime in March. Another thing I want to have a look at today is this 10-year yield on the US Treasury bonds. We see some analysts comparing these with how gold performs, so let's have a look at what's happening here. 10-year is actually approaching a few resistance zones just above where it is at the moment. The resistances are based from some of the 2019 and early 2020 lows as well as the highs, at around 1.43 and higher on the yield scale. Zooming in a little bit, we see that the 14-day RSI on the yields is also getting overbought at the moment. It's at 77 today, so over the next few days, I would expect yields to bump the head into that resistance and cool down at least for a while. Actually, there is also a gap over here on the yields at around 1.21. So over the next few days, possibly 1 or 2 weeks, there is also a good chance for yields to close that gap before they continue higher. And talking about the implications of the moves in yield for precious metals, for gold, let's have a look at the correlation between gold and the yields. These are the two bottom parts of the chart. The 10-day correlation over here and the 20-day correlation at the very bottom of the chart. As you see, the correlation between the yields and gold prices is not always negative, but it does seem to stay in the negative area most of the time, both for 10-day and 20-day correlation. Since early February, this correlation has stayed in the negative territory, which also supports our thesis for relatively stronger gold prices in the very short term over the next few days, 1 or 2 weeks. Coming back to the gold price, again, both DXY and the 10-year yields support a short-term bounce in gold, and the 14-day RSI on gold itself is also bouncing from relatively low levels, although it hasn't dipped into oversold yet. That's why in the slightly longer term, possibly over the next few weeks, I still expect another trip lower in gold price to give us oversold levels at that very interesting buying opportunity, possibly sometime in the middle of second half of March. So you probably don't want to miss out on that opportunity sometime in March. But is there anything to do about the short-term bounce over the next few days? Well, why don't you join us at myfinanceteacher.org and we can have a chat about that. Besides, as you see from this scroll, I update the members at myfinancesteacher.org on a range of assets pretty frequently, so you might consider joining us by clicking this register button. The first month is only $5 and it's $10 per month after that. Next, moving on to silver, there's another positive sign for gold in the longer term because over the last couple of months, silver has been diverging positively from gold. As you see, since late November and early December, gold has already made a lower low and is currently bouncing up from that low. We've seen several pokes below the Bollinger Bands, which actually also support at least a short-term bounce in gold. But silver, as you see, has not actually made lower lows. Instead, silver keeps making higher lows and higher highs. That is why our model portfolio at myfinancesteacher.org, while is holding precious metals, it's actually mostly in silver rather than gold. For more details on that portfolio, again, you might consider joining us. Next, looking at GDX, there is a long-term support at GDX, which used to be resistance over the years at around 32. Actually, it's just a little bit below 32, somewhere around 31.9. And over the last few days, GDX came very close to that support zone. We see several pokes below the Bollinger Bands, which usually predict some sort of a bounce. And a 14-day RSI, although it hasn't dipped into overbought, it's pretty low at 35. So a bounce from close to this support zone is probably very likely, bringing GDX possibly somewhere closer to that 50-day moving average at around 35.4, which would be quite welcome. After that, perhaps another trip to bounce from that support zone around 32. And there is also a similar situation on GDX, which has also poked below the Bollinger Bands a couple of times. And back on Thursday, its RSI was at a local low at around 37.1, relatively low, although not into overbought area. So I expect short-term bounce, possibly coming close to the 50-day moving average, somewhere around $50 or so, before another trip down, with likely giving us an oversold 14-day RSI for that nice buying opportunity in the middle or second half of March. And that concludes the video on precious metals, mostly gold and gold miners. Let me know what you think in the comments below. Remember to hit that like button and share the video with your friends. For now, I wish you a productive Monday and good luck in your trades.